Hello, and thank you for watching this video from CryptoML.com. In this video, we're going to talk about how to optimize your crypto trading bot performance, and that's by looking at how we work with exchanges in particular. So understanding how liquidity plays into doing this effectively. So just to kind of talk about what the problem is, it's what you see right here. It's this order execution slippage. This is what we're looking to control. And I'm going to pop over. If you look at you think about a crypto trading bot, it's following some form of intelligence, whether it's an algorithm or a machine learning model, as is our case, and it's going to issue an alert. And when it issues that alert, it should then enter the trade on your exchange. And when there's a difference between when the alert was issued and how it executed on your exchange, that's what we're going to be looking to control and really minimize any variance between those. There's always going to be a little difference, but we can control that and bring that down. So let's take a look at a particular example. If we dive down into CryptoML trade history as an example, we might see, like, this is a pretty good trade here. So this is a 17% gain. I think anybody would want that. But if you're following our signals and the bot enters that, you actually go look in your exchange and you say, hey, I did not get a 15% gain on this particular, or 17% gain on this particular trade. Maybe it only shows as 15%. And as you look into the details, you see that the buy price you got, so we're looking at this buy and sell set, the buy price you got wasn't 32.18. Maybe yours came in at 32.25. And then the same thing happened on the sell side. It didn't quite sell where this sold. You actually sold a little lower. So you bought a little higher, sold a little lower, and the net is you did not get this result. You got a pretty good result, but that little bit of slippage really starts to add up over time. And if there's one thing you can gather from looking at the CryptoML trade history, is it's these little gains really work over time. So we're making these trades, and of course there's some big trades in here, but overall it's getting this consistent 2% gain over time. Really works, and you see the account value starts really separating from what you might get with buy and hold as you go over time. So those little differences do matter, and you want to try to control for that. And so to kind of illustrate this a little differently, let's say this is price, and let's say it starts coming up. And what happens is most things, whether it's an algorithm or a machine learning model, you're going to wait until you start seeing some positive motion before a trade alert is generated. So let's say it starts moving up, you get this trade alert. And why slippage usually works against you is because you have this trend happening. So price is already moving up, you get the order placed. And if there's a delay or there's something getting in the way of when this alert's generated and when it actually happens on the exchange, then what'll happen is you got this alert, and then your actual execution happens a little bit later up here, and it's usually going to be at a worse price. And then as price starts moving up and it comes down, now the same thing's going to happen. The trade alert goes here, but your order execution in your account doesn't happen until here. So what looks like an excellent trade and is, say this is that 17%er, you actually get a little worse start and a little worse stop, and maybe you come in at 15%. So that's the problem we're trying to solve. This is slippage, and we're never going to get this perfect, but we can control it pretty well. So let's flip over, and if we come back to this article, let me show you where we're really zoning in on. So we are looking at this. So we want to cover this, the large spread, and try to bring this down as best as possible. So one of the best places we can go to get some information on this is CoinMarketCap. They publish a lot of good details about exchanges and the pairs within them. So the first step is to pick a good exchange. And I have this table here sorted by volume, 30-day volume. So this is what we're looking at. And you see a bunch of exchanges. Some of these I'm not familiar with. They probably depend on your geography. But CryptoML, we support Binance. And then if we scroll down quite a bit more, I believe Cornbased Pro is somewhere down here. Anyway, it's pretty far down, but skip that for a minute. What we're looking at is this trading volume, and you can see Binance here is trading this, what does that work out to, 27 trillion over the 30-day period, and you come down, these numbers drop pretty substantially. So you're getting into exchanges that do now a tenth of that down here. Oh, I see Coinbase Pro. So it's down at the 4 but you keep coming down and see a big difference. So you can imagine that gap. There's so many fewer buyers and sellers, so much less activity, that you're going to have bigger slippage by using an exchange down at this level, as an example. Now, there is a lot of question on how accurate this data is because it's reported by the exchanges. So CoinMarketCap has come up with their own liquidity measure. This is something unique to them, and this is something that they're doing kind of behind the scenes to normalize for exchanges that may be not reporting fully truthfully. So there's some good articles on why they suspect that and how they pull this data, but let's just suffice to say that this is the better data set to go with. And on this, we're going to see something a little different. We see Binance number 3, Cornbased Pro number 6. So those are the two exchanges we work with, and you can see they're both in the top 10. They're both doing pretty darn well here. Binance does about 3 to 4 times the volume of Coinbase Pro by this measure. So if we were to pick one of the two exchanges, all else equal, let's say you trusted both of them, both were available in your market, your geography. If you're looking, if you're getting it down to, I agree, this is a good exchange, then you might want to look at the liquidity here and say, Binance, I'm probably going to get better order execution with them. So once we've selected our exchange, there's the next step, which is to make sure you're looking at the right trading pair within that exchange. And this is where things really vary. So if I'm coming down here, now we're looking purely at Binance, and we're going to take a look at how the various pairs trade. Right off the bat here, you can see up top, BTC USDT, this particular pair makes up 34% of their trade volume, which is massive. I mean, that completely eclipses all these other options. If you're looking at US dollar pairs, the next one down is BTC USD. And yeah, I mean, you're 30 some odd more liquidity at this top one. So you're going to get better, faster order execution if you use this, simply because there's more buyers and sellers. Okay. The same goes. So, some people may want to instead trade something like Ethereum or, let's say, Litecoin. And you really need to consider, is there a reason you want to do that over Bitcoin in this case? You just don't have that same degree of liquidity. And so it's going to impact your order execution. Okay. And let's take a quick look at Coinbase Pro here. So real similar story. We've got, instead of USDT at the top, we have USD. So BTC USD is the pair to trade on Coinbase, and it's even more extreme here. It's 45% of the trading volume happens in that one particular pair, and things drop off super, super fast. We do have BTC USDC, but that is, 2% of the volume versus that 45%. So that's a super big difference. Now, there's going to be some people who have a Coinbase Pro account. They can't trade USD in their country, so maybe they have to come down here. But you need to understand that's introducing some of this order slippage risk. So that's it. Hopefully you have a better understanding of how you can improve your bot trading performance, and you get it closer to these numbers over here by picking the ones that are traded most. So that's that. I think if you have any questions, you can head on out to this article. We'll put a link in the notes there, and you feel free to ask questions there. You can go onto our forums and do the same. Also hit us up below in the comments here. And if you haven't yet, head on over to CryptoML. You can get a free account and come in and see what we're all about. We're hopefully here to help you, provide you some great machine learning based technology to help with your crypto trading and investing. Thanks for watching.